TheAnswer.com. Now, from the Signature Bank Studios. This is Chicago's Morning Answer with Dan Proft on AM 560. The Answer.
Top of the morning, Dan Proft here. So Treasury Secretary Scott Bessent took the Scott Bessent show from the House on Wednesday over to the Senate on Thursday and had exchanges like this one with a Maryland man, Abrego Garcia's BFF, the good Senator Chris Van Hollen.
You used to believe that tariffs would increase inflation and prices. Isn't that true?
I wrote that in a letter to my investors, but a year before, I also wrote that I thought Senator Warren would be the Democratic presidential nominee. Okay. So my predictions have been bad. Have been bad.
Okay.
I mean, he's just got a million of them, that Bessent. Okay, first of all, that inflationary prices would be higher. Speak of the English, Senator Van Hollen. So here's the thing. Rather than pretending that a tariff isn't a tax and it's not a bolt-on to the price consumers pay as companies pass through taxes to consumers, basic stuff. Rather than pretending that, just say, look, again, what the president did is use tariffs and America's economic strength as a cudgel to beat down trade barriers. So tariffs in a vacuum are inflationary, but tariffs used for the purpose of creating a more free trade environment, lowering tariff barriers, are not. Why is that so hard to understand? By the way, Abrego Garcia, BFF, and the whole rest of them, just as I said the other day, talking about Bessent's performance in the House, all of you phonies up there who never saw a tax increase you didn't support are now wringing your hands about a tax that you've previously supported when tariffs were imposed by someone in your party, just for the purpose of protecting industries. And some of that is being done by Trump, too, but not with a larger play of leveraging our strength to bring down tariff barriers across the globe. So why don't you just spare me? It's the same as you people talking, you phonies talking about Second Amendment rights when you're talking about L.Perry, when your entire careers have been spent trying to ban guns, railing against the Supreme Court when it held that the Second Amendment is an individual right of self-protection. So why don't you just spare me your bull jive moralizing? That would have been so much. I mean, I appreciate the quips, but I'd like to just put it between the eyes, and I hope more people will do the same here, of these, rank hypocrites. They don't care about tariffs, and they don't care about your individual right to protect yourself. They just care about being reflexively anti whatever Trump is doing to provide red meat to their mindless, voracious base. That's it. For more on this, pleased to be joined by Jim Perry, CIO of Perry International Partners. James, thanks for joining us. Appreciate it. James? We have James. There he is. All right.
Yeah, can you hear me?
Yeah, we got you now.
Okay,
all right.
Sorry about that.
You don't have to talk.
Good morning.
Yeah, good morning. You don't have to talk about the politics of this, but talk about the economics. What's the street's view? You talk to all these high-flying financial types and high-net-worth individuals. What's the street view of Scott Bessent?
Good question. I think it's very favorable. I think Scott Bessent's a really, really smart guy. I listen to everything he says. I think he and Marco Rubio are probably my favorite cabinet members. And I think, I'm gonna like Kevin Warsh as well. But Scott Bessent's a smart guy. He worked for Stanley Druckenmiller, and he knows how to make money. He's got a lot of credibility on the street. Yeah, right. I think Bessent's a good guy. I think he knows what he's doing, and I think he's probably the smartest Secretary of Treasury that we've had for a long, long time. I'm glad he's there because he's shepherding a ship that needs sort of some clarity after about 10 or 20 years of not having any.
So this week in the market, what is the sell-off after Anthropic seemed to make a breakthrough in the AI race with respect to some of its capacities to replace, possibly replace popular software platforms like Salesforce. What does that tell us about the how volatile the market is going to be with every new development of any seriousness in the AI race?
Right. Another very good question. Anthropic is a very good company. I don't know if you use AI as much as some people do or I do, but it's probably 10 times more clear and precise with answering questions than stuff that was around a month ago. So every month or so, there's a new company that has a new version of AI, and it's better than the next by a factor of 10, right? So, Elon Musk comes out with one, Google comes out with one, Microsoft comes out with one, Meta comes out with one, Amazon, and now it's Anthropic's time, right? So I think that the version of what they're doing in AI is exceptional. It's taken leaps and bounds beyond something that was there a month or two ago. Yet, and it's making the market nervous. The market has been so nervous. I was out to dinner last night and talking with some people. There's about 6 of us. And everybody is so bearish, so nervous, so worried about what AI is. And we've heard this for 2.5 years now, right? And I don't know if it's because this is how it's being marketed or it's got a fear level to it because there's an unknown to it. And there are people who say, gee, this sounds scary to me, and, humanity is going to suffer from all of this. And I get all that, and it's on every headline on every newspaper every single day, right? So you can't. But the point is that I actually think I'm not as nervous about AI as a lot of people are. I think the job growth situation is a typical example. Everybody thinks we're going to lose, tens and tens of millions of jobs. Yet here we are with the largest labor force ever. So, if that's going to happen, let's look at the data and see that it's happening, and then we'll have a discussion about it. Until then, why are we so nervous about things we don't understand? And if you don't understand it, take the time to learn what's really going on out there.
Besson got into an exchange with Raphael Warnock from Georgia yesterday about the manufacturing and where exactly that is. And the indictment handed down by Warnock is that there have been 72,000 manufacturing jobs lost in the labor force over the last year. And Besson said, well, look, we've got what we have is we're on the cusp of a manufacturing renaissance as the onshoring is happening, as the investment is coming. So it's not there yet, although I talked to a lot of small manufacturers. A friend of mine who's got a steel fabricating firm in Will County, and he said, I can't bid any more jobs. I'm running 3 shifts, 20. I'm 24/7, and I can't keep up making plates for John Deere and Caterpillar equipment and so forth. But anyway, that's just anecdotal. But Besson's larger point was, 72,000 jobs down according to the bean counters who say so. But the manufacturing renaissance, we're on the cusp of it. Is that something that you concur with?
Well, on the cusp of something like a manufacturing renaissance is a bit of a stretch. You have to remember that manufacturing jobs in this country sort of 50 years ago were almost 50% of the jobs, right? And now, I don't know what the exact number is. I haven't looked at manufacturing, but it's sort of like 11% right now, 10%, 12%, something like that. So the point is that this country doesn't really manufacture much anymore. And the reason for that is that, all of these corporations have said it's better for our shareholders to not manufacture things here, reduce our costs, have it be done in China, and everybody's happy, and then I can retire wealthy. That's been going on for 20 or 30 years, 40 years. And the fact is, we realize that there's a risk to that. So, is there a manufacturing renaissance happening right now? I think the trend has changed. I think the trend has turned. I think that you'll see manufacturing get up towards, 15% in the next 2 or 3 years. But the idea that manufacturing is really going to change here because of the tariff situation, I think is kind of. I would be. How can I say this? I would like to see it before I believe it. How's that?
Yeah, I mean, maybe a bit.
Right?
Well, also, maybe, jobs, just sort of the jobs as the metric is the wrong metric. I mean, you can
Probably
see
is.
onshoring or development, expansion of some manufacturing sector, some of the sectors within manufacturing, but it's more the productivity, the national security interest. I mean, there are other metrics besides just the aggregate number of jobs in a particular sector.
I agree. And, I give credit to sit there and listen to some of these guys because they really want to listen to themselves speak, and they really don't.
Of course.
They ask silly questions, because they have that right, I suppose. But the point is, I think where we're going on manufacturing really is going to be automation, right? So, your listeners will know that there's a Stellantis plant out toward Rockford, Belvedere, right? West on Highway 90 from the city by halfway between here and Rockford. And it's up and running, right? And it's been closed for a long, long time. But the fact is that it's mostly automated, right? It's mostly robots. And I think that if you can get the manufacturing that we need in this country that is implemented with a smarter software, artificial intelligence, and machines that know how to work, I think you're going to see a manufacturing renaissance in this country that will be productive, and it'll keep the country safer because we'll be able to produce the things that we need to without being dependent upon a rival that doesn't have our best interests in mind. And I think that trend is coming, it's changing, and I think it's for the better. And it's one of the reasons why the stock market remains, Dan, within 2% of its all-time highs here in February, before the Olympics started, right? Before they started today, right? So I think the stock market's in pretty good shape. I think investors recognize that slowly but surely things are getting a little bit better in here, And
you said in your recent video that you are overweighting in tech and defense for a reason. What is that reason?
The revenues that these companies are generating, the profit margins that these companies are generating, and the profits that these companies are generating have never occurred in the history of economics around the globe at this level. You've got trillion-dollar companies whose revenues are increasing by 30% a year, all right? Think about that for a second, right? Mm-hmm. The revenues in the infotech space are averaging 30% higher than last year, right? These stocks are selling at 25 and 26 and sometimes higher than that earnings. But the point is, the corporations that you can buy around the world for putting your money at risk, where it's safer with a safe dollar, rule of law, and that the generation of the return on investment, you cannot find that in Europe. Companies like Nestle, great companies, they're not growing, right? Japanese manufacturers, they're not growing. Chinese exporters, they're not growing. Here, innovation, productivity, and technology are bringing revenues to some of the biggest, most innovative companies in the world, and I think it's going to keep happening. You wouldn't know it by looking at the news. It's scary as heck out there. I was on the phone all day, every day this week saying, what do I do? What do I do? And I just say, hold on. We're 2% from an all-time highs, and revenues are growing at 30%. Profit margins are running at the highest level in history, right? 13.2%. And net income, profitability in the high-tech space and defense space is running at 20 and 30%. You can't get those kind of numbers anywhere else in the world. So from that standpoint, it seems like a no-brainer, right? Follow the data. Look at what you see out there that's on a comparative basis. Recognize the dollar's pretty firm. The country is in a stable place. Interest rates are low. 10-year treasuries are at 4.20, right? They haven't budged all year, right? Inflation is coming down. True inflation, the number that we saw was out from the government last week, it's below 2%, right? So AI is going to reduce the inflationary impulses of the country. Lower taxes bring more money to the pocketbooks of consumers. Deregulation is going to increase a productivity boom. And when you move $1 trillion from public sector, which is the government, to the private sector, the stock market's going to do well. So I would say look at the data, ladies and gentlemen. Don't listen to the news on the radio, and recognize that there's a lot of good things going on in the country, and it's probably going to be going on for the next couple of years.
Don't just do something, stand there. Yeah. So then, I mean, so that sort of is a perfect lead into, the other tumultuous market events in the last week, which is the spike in precious metals, and then the drawback, and then of course Bitcoin dropping under 70,000. And so what are the people that you talk to and advise? What do they, and maybe especially those that were high on crypto, are they still, or are they now seeing the standards like gold as a hedge on inflation?
Well, let's. There's a lot going on there, a lot to chew on. I'll start with Bitcoin. Bitcoin is trading at 66,000 today, right? It's up a little bit today, but it was at 126,000, right, in October. So it's down by 50%, right? That's the biggest downtrade that we've seen from these high levels in a long time. And Michael Saylor, who is probably the poster child cheerleader for Bitcoin, runs a company called Strategy Inc., which is kind of a treasury company. That stock was a $500 stock 4 or 5 months ago, right? It's now at 100, right? So it's down by $400. The crazy thing is it's the same price that it was 2 years ago, right? So again, everything's kind of got a relativity to it. Bitcoin is a tricky security. I do not own any now. I have in the past and made a little bit of money. I didn't make enough of it. I didn't even put it in the professional account for the company. I put it in for me, my wife and kids. But it's hard for me to see that it's anything other than a sort of a painting in somebody's house. It's a sort of a modern painting. What's it worth? I don't know. It's worth what anybody wants to pay for it from you, right? So to me, I would rather have gold, right? You know what it's worth and you understand it. And the gamma squeeze that went on with gold last week at this time, Thursday, Friday, and Monday, is not a surprise either. And I think what makes a lot of people nervous, to be honest with you, is that there are elements and there are intended people in the world who are trading things at levels with computers that people don't understand. The idea that there's 4 times as many call options on gold options than puts, and that the leverage on it is at 90 to 1. There's no physical delivery of gold. And gold goes up 65% last year, and then 30% in January, and then it dropped by 25% in 3 days, right? And then kind of goes back up again. People kind of look at those moves and go, I don't understand what the world is doing, and I don't know who did this. All I know is that my gold price went up $1,000 for 3 days, and then it went down $1,000 for 3 days, and now I'm right where I was. So the point is that there's a lot of high-frequency trading and a lot of – I don't understand who owns all the copper in the world or the coffee or the gold, but I do know that if you just think about it as a hedge for what's going on out there, the dollar – is doing fine. I think it's going to remain the world's currency for a long time, reserve currency. There's a shortage of them out there in the world. And I got probably 3 calls yesterday saying the U.S. is uninvestable. I am never going to buy a dollar again. What is your president doing? What is wrong with you? You want to buy Greenland? You're getting everybody infuriated with you. And I just say, well, let's just see on the news, and it's being implicated. But the point is, if you're going to sell the dollar, what are you going to buy? What currency are you really going to buy? Are you going to buy the euro? What a piece of junk, Are you going to buy the yen? That's worse. Their numbers, monetarily speaking, from, deficits and debt numbers, they're 200% worse than ours, 300. China, that's even worse. And then you go further down that and say, well, let's talk about sort of Russia and Brazil and India. You say, good heavens, I'm not going to put my saved money in a currency like that. So I think the dollar is going to do fine, to be honest with you. If I was a rich guy that, sold oil or coffee or cocoa beans or something like that, and I had a little extra money and I was in a country that was unstable, I would open up an account at Northern Trust and put money into the bank in this country and probably buy the S&P 500 because it's the safest place where my money could go. So I don't think that's going to change anytime soon. And even though there's some senators and some congressmen who are going to bark at Scott Besson, goofy about whatever they're going to talk about, that's part of the free market and the free speech of this country, which is a risk, but you have to allow those voices to be heard, right? And even if they sound stupid, they sound like idiots, they have the right to sound stupid. And that politicians are going to do that forever. So let's just let them do it, but don't take them too seriously.
James Perry, founder, CIO of Perry International Capital Partners. Jim, thank you as always. Good stuff. Appreciate it.
Thanks, Dan. Enjoy the weekend and enjoy the Olympics. Bye-bye.
Oh, yeah. I can't wait for those two actors from the gay hockey movie to bring the torch in. Looking forward to that.
Curling. Watch the curling.
Watch the curling. Okay. Jim Perry joins us at Chicago's Morning Answer.
Before you see it on TV, share it on Facebook, or read about it in the paper. Hear it here first. This is Chicago's Morning Answer on AM 560. The Answer.
Wesley Financial Group is not a law firm, and Chuck McDowell definitely not an attorney. This is Chuck. If someone talked you into buying something really silly and you want to get out of that silly